What's up, everyone, and welcome to this market update for Lutheria. In these market updates, I'm going to give my thoughts on Bitcoin and what I'm kind of seeing here on the charts after I do my technical analysis for the day, just to give you guys a quick update and just so you guys can kind of follow along with kind of the stuff we're doing over here at Lutheria. So what I'm kind of seeing right here is we have this high that we push up into right here, and then we have a low and then a higher high. So this level, this gray level, should have acted as support on this initial drawdown, but in fact what happened was we pushed right through it and closed both of these candles below it. So now this gray level should act as resistance, and indeed you can see with this upper wick that we're experiencing right now, it is currently trying to do just that and is rejecting off of it as we speak. Now this level has a lot of confluence, and one thing I want to point out with this on these lower term time frames is you see on the 12-hour time frame we have the same exact setup here. So we have a high, low, higher high, and then when the price comes into it here, we go right through it with this big black candle here, close below it, and now we're testing it. And you can see that these two candles here tested this level before, but did not go down and break below the previous lows of these candles to form a high. So this is still technically the first test of this level, and that's what we're getting right now with this candle right here coming into this 12-hour fresh level, which in my opinion should hold, but only time will tell. If we go into the 8-hour time frame, this is a really interesting setup here that I think the whales in the market are the big players that are that push the price around for their own benefit, and they have all the money, so they're the ones that ultimately decide where the price moves, and then the little fish like me just kind of feed off of what we think that they're doing. But if we look at the 8-hour time frame here, we can see that we came down, we had a low, high, higher low, lower high with this candle, higher low, and now we're making a higher high above these highs. But this looks like an engineered move by the whales, and I'll explain to you why I think that is. And by engineered, I mean that they're trying to engineer a move that looks to be bullish, so then they can grab people's stop losses above these highs that people put when they were shorting right here, because people entered shorts right here and traded this down. But they put their stop losses right above here. And you can see that this level right over here, if we have the final down candle before this push above, that should act as support on a drawdown, but you can see that what happened was we traded right through it. This was an inside bar, so it doesn't count as a bounce off. We traded right through that level and closed below, similar to the daily and the 12-hour time frame. And if we draw a line straight across there, what we can see is this price, when the price went up right here, we did not touch that level. So this is another untouched level because that low is at 41,450. And if we look at the high for right here, we can see that the high was 51,415.41, meaning that we did not touch that level. So this is an untouched resistance level as well. And now we're coming into this level for the first time and grabbing stop losses, which means now we have fuel to go down. So kind of what I'm seeing is all these levels kind of line up, and then if we go down to the 2-hour time frame, the Ichimoku Cloud is an indicator that I love to use for trends. And what we're seeing, if you look at the Ichimoku Cloud on this run up, it looked the exact same the entire run up. The Tenkin, the blue line, is above the Kijun, the red line, and the cloud and the price is above the Kijun, the red line, and the cloud is green. And when that happens, that's the most bullish scenario that exists. And so, we see the price reflect that with this, huge run up in price. But then the price trades down below the cloud. Now it's operating below the cloud, which is bearish. The cloud is flipped red, which is also bearish. And the Tenkin and the Kijun, the Tenkin recrossed below the Kijun here. And the Kijun was flat. And this is a good moment to kind of just talk a little bit about the Ichimoku Cloud and how I like to use it. This is what we would call a C clamp because it looks like the shape of a C. You can see that, if we were to draw right here, you could see that this would form the letter C in the English language. And so whenever that happens, what that means is the price should mean revert. That means it should go towards the mean which is the Kijun in this case. And when the Kijun is flat, like we're seeing right now, it is also a sign. It is also a sign that the price should come into it. It's kind of magnetizing the price to it. And so that's what we see here. The price, comes up, but it doesn't touch it right here. And then it comes down, consolidates, and then comes up, and now it just touched it for the first time. And so if you were taking this trade on the Ichimoku Cloud, what you would do is you would enter right on the Kijun, you would enter a short entry, and then you'd put your stop loss right above the cloud right here. And so this would be a really good entry for a cloud trader because your stop loss would be really close to your entry point. It would be literally like 1.75% away. So that's a really close stop loss. So when you have a close stop loss like that, you can enter with more size and still only be risking a small amount because your stop loss is so close. But you obviously want to make sure if you're putting your stop loss really close that you really believe in the setup and there's a lot of confluence there. But as we can see on this 2-hour trade that this is confluent with this daily gray level that is untouched, like I said. So if the 2-hour, if we end up trading down, we'll be looking for a few different levels to take profit. So on the daily time frame, since this is a daily trade, but the 2-hour is just confluent with it, where I'll be looking to take profit would be at the first daily support level, which would be right down here at about 48,667. That would be just a level where I'm taking some percentage off of the overall position because at that point, we'll have made about 5.7%, which is still pretty good in this time frame. But then, as we can see, if we came down and we formed a lower low, we would be down all the way down here at 44,888, which would give us above a 12% trade. But really the level, if we break down on a lower low here that I'm going to be looking for as a cloud trader, is this Kijun level. And you can see down here when we traded into the Kijun, this level acts as support when we're in a bullish trend. And right here, we had a perfect example of that, of 2 tests of it, and then this massive run up in price. So if we come down to it again, that's where I'll be taking profit on the short. It doesn't necessarily mean I'll be going long there because I want to see a daily trend change on Bitcoin, because if we were to come down, that would be a lower high right here and then lower low, which would ultimately be the bearish trend. And so that's why I would be looking to just take profit there, which is be right around 42,000. And if we look over, we can see that that's confluent with the previous all-time high level. And those are the types of take profit levels that I like to look for because those are where other people are going to be looking to take profit on a short as well. So that level is down about 18%. So that's a really nice trade if we go down to there. And you can see one thing I want to point out about trades like this, and the reason why I really like this setup is because of the risk to reward ratio, which is really how much you're risking in terms of, if you get stopped out versus how much you'll make if the trade goes your way. So if we were to trade all the way down to this daily Kijun and the previous all-time high, that would be an 18.64% trade with a risk to reward ratio of 7.78 roughly, which is really, really good because you'd put your stop loss right above this daily level if it doesn't hold. Somewhere above there, I just put mine at 52,919, which isn't exactly where it is, but that would be where it would be, somewhere in that range. And so you can see that when you have a risk reward ratio like this, these are really good trades to make because even if I get stopped out, I lose a very small amount. But if the trade goes my way, I make a very large amount. And so if you continuously over time take a lot of trades like that, where you have a high risk to reward ratio, somewhere above, usually I like to take ones that are above 2. If you do that enough, what happens is over time, you end up, some of those trades end up going your way. And so like if this trade went my way, for instance, I'd make like 18%. If it didn't go my way, I'd only lose 2.4. So if you do that enough times over time, you'll have some losses every now and then, but the wins, like this one win, would negate, like several of these types of trades losses of 2.4%, because this one would be plus 18.64%. So it's just something to keep in mind. That's kind of what I'm seeing here on Bitcoin. I'm not even going to talk about ETH because ETH is pretty much the same exact setup, but just even more bearish than Bitcoin. So right now, you know, if we end up pushing down here and then going below on the next coming couple days and coming down in these levels, the place where I'll look to be a buyer for the bulls that are watching this video would be down here at around the Tenkin and the Kijun for the weekly time frame. Right on this last black candle. This is going to be your really solid support level. The top of these levels is pretty much the top of this block. So pretty much the top of these two bodies of the candles is going to be your support level, which is right around about 37,900. So that's going to be where I'm looking. And then, you know, if we don't bounce there and we go down below this low and close below this gray area, that's going to be a very long period of consolidation, in my opinion, before we go back up into all-time high levels. If we bounce off of this level and then go above again, we have a pretty good chance of forming a lower high, higher low, and then higher high, which would look something like this. If I can get my tool here. So we would come down, we would test this level, we'd come up, form a lower high, come down again, and then form a higher low in comparison to this one right here. And then we could go to a higher high. Or maybe we even bounce around a couple more times before we go to the higher high. But that's the most bullish scenario. That's like if on the weekly time frame, that's what we'll be looking for. Unless this daily trade doesn't pan out, in which case then, you know, if we just blast through this level, you know, and I get stopped out, I'll be just fine if I get stopped out. I'll be happy that, you know, the bull market is continuing. But you have to take trade setups like this. I'm not bearish on Bitcoin. I love, obviously, Bitcoin and the cryptocurrency market as a whole. But this is a good setup. And so these are my thoughts on the current market that we are seeing on Bitcoin. I hope that was helpful for you guys. If you like this video, please leave a comment down below, like it, subscribe to our channel for future market updates, and I will see you guys soon.